Good morning and welcome to Morning Markets with True Potential. Checking about news and developments over the past 24 hours. Focusing on equity markets. Equity markets were mixed yesterday. We saw gains in both UK equities and also European equities, but we saw US equities were weaker on rising bond yields, which has continued from the pressure, the central bank raising rates from last week. If you focus on emerging market ended the day flat. They started the day on a positive note, but as the Chinese media reported, saying that COVID cases are on the rise in major cities and death tolls are also on the rise in the major cities, that fed into negative sentiments towards the back end of trading day. So overall, emerging markets ended the day flat. What was boosting in European mood yesterday? It was better than expected data coming out of Germany. We saw IFO business sentiment indicators coming better than expected. For December, it came at 88.6, its highest reading since August. So this is the third consecutive month that it has come better than expected. The sentiment also improved from businesses. They were less pessimistic on the general trajectory in the macroeconomic backdrop. So all of that has fed into positive momentum in equity markets. Still, it's worth pointing out the recessionary outlook for Germany continues to rise. Though it is important to also highlight that the impact of energy crisis is much less than it was feared early at the start of the energy crisis in Germany. Here in the UK, Bank of England announced yesterday that it will restart its quantitative tightening program, which triggered sell-off in the gilts market. The Bank of England announced that it will start selling evenly across the shorter dated, medium dated and longer dated gilts starting from January 9th. That led to two-year bond yields rising up by 20 basis points. We saw 10-year gilts also rising by 17 basis points. It's important to highlight that gilts market will continue to have volatility, bouts of volatility, particularly when we see further pressures coming out in gilts markets as markets in coming weeks prepare for another 50 basis points rise in the Bank of England's February 3rd meeting. Moving away from UK, this morning we saw Bank of Japan also surprise market by tweaking its yield curve control, where Governor Kuroda, the Bank of Japan governor, announced that the shift in the yield cap on 10-year JGB, which is Japanese government bonds, will be lifted to 0.5% from earlier 0.25%, which means that up until now, Bank of Japan has been buying and trying to maintain the 10-year JGB yields at around 0.25% every time the government bond yields try to move out from that 0.25%. Bank of Japan was continuing buying it. So now they have shifted to that post to 0.5%. So that means every time the 10-year Japanese government bond yields move beyond move beyond 0.5%, Bank of Japan will be heavily intervening in buying those government bonds to maintain that 0.5% yield cap. What has been upshoot in the markets? We saw a marked move in Japanese yen. Japanese yen is strongly up this morning, up around 3% versus dollar, but it's similar moves have been seen and observed in other pairs. We saw Japanese government bond yield obviously reacting on the upside, but that pressure has been felt across all government bond yields. We saw both UK gilts, US treasuries, and also German bonds yields rising higher this morning. Overall, risk sentiments is particularly weak this morning on the back of rising bond yields as per se. Outside that, we don't have any major data coming out today, but as always, we will keep monitoring the incoming news, and we'll keep informed you with all the data and developments in the day. Thank you very much for watching Morning Markets.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.